you have an edge, and your edge is to wait while everyone else is need to get trade, need to strength.
Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility.
Hey, how's it going, guys? Welcome back to the mentfx public YouTube channel. Today, we are going to be doing a very simple backtest. We're going to be using the M mentfx private mentorship concept. It's a private concept, but I'm going to make it available to you guys today. All you have to do is go in indicators, type in mentfx M, and very simply, it will put onto your chart these little bars of green and red, which are going to be on both sides. So this is a technique that you can use to enter, but you need to understand how we use the concepts taught on this channel to actually get involved with these rather than just taking every single one. This is the same idea behind Wyckoff, all the fun stuff. To give you a simple exercise and understanding of what this does, it simply looks at candles that have a wick that reaches above previous candle's high, and then a closure below the previous candle's wick, to put it simply, right? The idea of this is that you're seeing a fractal distribution. In any of these areas that you see are red above, it's a fractal UTAD, or what you would consider a UTAD. Fractal UTAD, fractal UTAD. And you can use these to get involved on trades. However, if you don't have an understanding behind the market as to how you're going to be trading it already, or how to predict bias, direction, targets, well, then if you're taking every single one, you're going to be taking tons of losses, because, you take any of these, you're going to be losing. You take any of these, you might be losing. I took this one today, did very well on it. I mean, secured my 90% here, looked to keep trailing, trailed it with the low here, and it got stopped out at plus 8RR total, which is phenomenal. So that's a M. Very simply, it's a fractal distribution or accumulation based on the side that is colored. It can happen on any of these candles. It can happen anytime. However, your job is to understand what your bias is, what you're expecting, and then trade it in reference to that. So today I'm going to show you an example of that. We're going to pick a fully random pair, and then we're going to backtest it. So I'm going to show you what you can do, and then of course you yourself will be data collecting this. So what I'm going to do quickly is I'm going to open this random new Chrome document, and I'm going to go random Forex pair generator. We're going to click on this, sure, and we're going to press on generate. We're going to get a quantity of, let's say, 2 unique, and we're going to click generate. So we have FKP and ILS. I don't think we can even trade that. So what we're going to do is we're going to make 4, and then we're going to take 2 of the ones that we've actually heard about. Okay, so generate, boom. So we have euro and we have AUD. Okay, we'll go euro, Australian dollar. So what I'm going to do very quickly, and I suggest a lot of you learn to do this, is you're going to hide everything on your chart just like that. You're going to get rid of the indicators just for now, and we're going to go euro AUD. And now let's go to a euro AUD that I haven't used yet. So we'll go like this. Beautiful. Delete everything. And we're going to decide on what time frame we're going to use as our lowest time frame of entry. Let's decide that it's going to be a 5-minute, just for the sake of this backtest, to show you that it doesn't matter what time frames you do this on. So a 5-minute is the entry time frame that we're going to be using to actually enter, and then everything else will be used for contextual purposes. We just won't be going under 5 minutes. So this is up to you how you want to do that. Now we're just going to go left. Actually, we're going to count how many times we're going to go left. I don't know. So we're going to go random number between 1 and 3. Okay. I'm going to press generate. Okay. Looks like we got 3. So we'll go 1, 2, 3. Okay. And then let's imagine the screen is bunched up into a few, like 3 quadrants. 1, 2, 3. We're going to ask it where to go. Generate again. Again. Okay. 2. So we'll go 1, 2. Boom. Great. We're at a random area in time. We're going to go up to a time frame, so we don't predict any price action or anything, and we're going to throw everything back on just like that. Okay, now we have everything back on. So we're going to ask ourselves if we're in a context that's worth trading. Once again, as per the last video where I taught you guys, how I got on, looked at a market, decided if it's worth even trading, and then if it was, then we can scale down and then decide what to do. So currently, what I instantly see is a market that's kind of back and forth, had some accumulation, definitely in a more long-sided market at the moment, has broken down a few times and has actually started the mitigation of a point and is moving short from there. So the immediate expectation is that price likely wants to run this low here. So we can name this something. We can say higher time from target, just like that. I'm just going to save this so I have it for higher time frame. There we go. So we have a higher time from target. So when we scale down, it's easy to see. So we have that laid out. That's clearly what is currently happening. Now we want to prove that to ourselves by stepping down maybe to an 8 hour, taking a look, right? Relatively the same thing. You can see the 8 hours in a redistribution model, right? Breaking lower, breaking lower, breaking lower, breaking lower, had the move up, which is when we expect it to be a UTAD because of what I call, in the private mentorship at least, the redistribution model. This is the kind of time where a lot of dumb money is starting to finally think that long markets have come in and they want to go long, long, long. So right now, you know that retail is thinking long, 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 long. So shorts are going to be the likely thing that holds, and we had a re-break down, and the daily and the 8 hour agree relatively to this zone. So, you know, this is all going well and swell, and we're looking for the continuation short right now. So all is good on that end, and we can, you know, you can draw that stuff in, but in your mind, you need to learn how to contextually see this every time. So in your mind right now, you should be able to go, daily was bullish, has made a break bearish, and is actually continuing off a mitigation bearish. And the 8 hour was bearish, had a redistribution model, likely a UTAD. A lot of people are trying to go long, and it's likely to continue short. Jump down to like a 6 hour or 4 hour, whatever you want, because remember, we don't trade timeframes, we trade the price. We use timeframes to see the price. Banks, institutions, composite operators, whatever you want to call them, are not always sitting there looking at candlesticks. This is something that you all need to realize. They're sitting there looking at orders. They're using algos. Some of them are looking at order flow. Some of them are using candles. Some of them are using our averages. Some of them are using fundamentals, et cetera, et cetera, et cetera. However, when big money gets involved and when big money begins to move the market, whatever kind of trader you are, if you understand how to look at the orders that are coming in by looking at different time frames, you're able to understand where the likelihood of that market is going. That's how we were able to predict Euro USD on the entire down move in 2022. That's how we're now relatively bullish on it, with currently accumulation occurring, which is why you guys saw that I had a little short during the week and a long. That's why we were able to predict the UJ longs in 2022, and then the distribution that's occurring now in 2023, or the start of 2023. So that's where that comes from. You need to understand how to look at timeframes, not for the purpose of the time frame being the special sauce, but for the sake of understanding how orders drifted into that market from a number of different ways of trading. Because at the end of the day, if orders are coming into one side because the smart money or the composite operator knows where the money's heading, and now they're distributed and they're moving short, well, that's going to show in the candles, even if that other person is using some other form of analysis. This is why it's so important to understand why you're doing what you're doing, because when you understand that, well, nothing stands in your way, because now you know what your edge looks like long term. So what we're seeing here is distribution is currently occurring. I don't know if this is right or not, but in my mind, I'm instantly thinking distribution is occurring. We want to see shorts during the week, likely. Shorts are going to deliver. Now, let's see if we are in a bias that's going to allow us to look for shorts for the highest probable likely setups. Okay, so right now on the 4 hour, what we can see is we're in this bullish range, but once again, many people, they want a long here, they want a long here, they want a long here, they want a long here. Great. So clearly we have areas where both dumb smart money and retail are going to want to look to long, because again, retail is going to be looking to long almost close to anywhere. Like here, there's a lot of retail getting position on longs here. You don't need to understand this method of analysis of, oh, where is the retail getting involved? Because notice how the 3 box does it for you. If you understand what ranges you're in and what ranges are delivering from a left to right perspective, and you ask yourself about the story, then you already are on the right side. You don't need all this stuff. I'm just showing you this because a lot of you coming from specific and different backgrounds are likely looking at this going, oh my God, the market is, you know, it's clearly bouncing here, whatever it is. So we want to see lows get taken out. The 4 hours is in this bullish range right here. It's actually made a few breaks to the top side. That's actually really good. We missed the setup here, but you know, that's okay. It's breaking down intermediary, so there's an opportunity actually to look at a potential short from an area like this or like this, but that basically overlaps with this bigger area we have here. So you know, it's going to further show us that this is a strong point of distribution, and in the case that price for some reason wants to mitigate here again, I would expect those shorts. Otherwise, intra-week, what we're going to look for is the continuation shorts. It's as simple as that. You can keep your process simple. So we're going to step down lower to see if, once again, there is a current bias that's allowing us to trade this in a clean way. So you can see price from left to right began to break down, went short, broke down, broke down, broke down, started to break upwards and broke upwards. But once again, we instantly assume this to be what? Distribution, a redistribution model, where once again, if you really want to label it, you have the buying climax, you have the ARs, you have the sign of weakness in phase B, you have the STs, you have the STs or ST and Bs, you have the springs, or the UTADs or the UTs, the UT, the UTAD, whatever you want to call it. And here's the breakdown. So the expectation is to see this remain short. Now, we don't need to come up here to go short. This price can continue short. So currently, just by looking at this, the contextual elements for a setup to be met are actually there. They're actually very clear and very clean. So as we scale down to our 5 minute, which is our time frame that we're willing to trade on, there's good reason to potentially go long or short in this, because we're So this is something that's also important. You don't only have to look for shorts. That is true. But when you have a contextually sound market, you now have an anticipation of what is going to occur. And as a result, you can trade both sides if you really want to. However, in this scenario, based on whatever is presented, we'll look to trade whatever. So this is the first MB, or sorry, public domain. This is the first break that's occurring right here. And therefore, we exist in this high to this low, as you can see denoted by this little structure indicator that I made available for you guys for free. So mentfx structure. Again, you can look at structure a number of ways. This is the way that I personally choose to look at structure, because it looks at the last down move before the up move, or up move before the down move. This is the concept of the composite operator that I teach of supply and demand. So this is how I utilize my structure views. And again, this is instantly a redistribution for me, right? A lot of people, as we love to say, spring, building a trend line, building a thingy, building a head and shoulders, building a resistance, a support. And again, there's zones everywhere. No one knows what they're doing. No, we're approaching this simply. Notice how we took a higher time frame. We have a target that we're working towards, so we know where we want to be working towards. We have an area from which we're coming that we know is contributing to a distribution model. We have multiple time frames, like the 4-hour, the 8-hour, and the 1-hour, contributing to the same redistribution model. So the likelihood of price is to keep on going lower to take out this low, and or like we spoke about, price could come back to mitigate if it wants to up here, and the lower time frame during any given session is going to show us what the likelihood is there, because again, we can be wrong and still make a lot of money. So let's step down to a 30-minute. You know, we're just asking ourselves the story. So same thing's kind of going on here. Redistribution model coming up a little bit, re-breaking down, same exact range. So really clear for the shorts. You know, we can highlight some of these areas. So the 1 hour and the 30-minute, you really have, like, you know, you're playing around this and this. It's up to you how you want to use this. I'm just going to use this lower one because it will account for absorption. We could see price come up, give us a tap and go like that. That's perfectly fine. So we're just going to use this area here. Makes the most sense. You know, if you follow the mitigation, clearly these candles come up to fulfill whatever was in here and hit the unmitigated portions, as well as the small S&D zone that rested right inside of that candle. So this is the likelihood of where price wants to head. Now notice these red and green wicks. Again, that's the triple M mentfx indicator, also known as a fractal accumulation or distribution. And if you have pinpoint areas within which you look for that, and you look for entries that are very clear risk to reward, that's where money is going to be made. Okay, so clear area there. We can look at the 30-minute to see if there's a refinement. You can see the refinement actually does exist, and there's actually this right here, which does further show us that there were orders left up here. Right now, something that's really important is if we look at this from, if we just scale this down very simply, what you can see inside of this inefficiency or unmitigated price action is that candle on the hourly that reached up to mitigate this mitigated area now is also the candle that reached up just over that imbalance or that inefficiency, thereby showing us that this is still the very clear zone. And on this time frame specifically, it's actually showcasing to us that this is the clearest current zone. Now we can double check that with a 15-minute now, so that's what we're going to do. So the 15-minute actually kept breaking down and is now coming up. So what's cool about the 15-minute now is that it's making a redistribution model in a bearish market, and it's pretty much lining up with that same area. We're going to leave this area alone because at this point we'd have to make it a little bit bigger to this candle, which I don't want to do because once again, the hourly and the 30-minute were very clear. So we're going to leave those on. The reason I'm walking you through this is because I'm showing you my exact thought process in terms of SSC, the 3 blocks across time frames that I use every single time for any market. Nothing really changes. It's always the same thing. It's just an understanding of nuance, experience, and context behind whether or not it's going to be a market worth of trading or walk away from or show up to take risk on, whatever it might be. So 15-minute is looking to break down, likely going to break down below this and then continue short. We already have our higher time frame targets established. We can establish another higher time frame target now because we're clearly getting this bearish move. So another higher time frame target will be this one right here, just that low. So we're just going to label that another higher time frame target, just like that. Very simple. So when we're on a low time frame, we're not confused about where we are in this market. We know what we're looking to target over time overall. We know the areas from which we're working. We know this area is still a fine area to work from if we get a mitigation up there, again based on price delivery. We're on the 5-minute now, so we can't scale down further. Great. So this is the time frame within which we can work with to get entries. And now we're looking at what's occurring. So we have a model that's coming up, and this was actually a beautiful short up here, but we missed it, so it's fine. Price might come back up, but at the moment, you know, we're getting longs here, right? You can see these are accumulation longs. Am I going to take these? No, not at all. This is where a lot of people go wrong. A lot of people, when they see this, are going to take longs, or on a lower time frame, if it's breaking up, which it is, or making a little chalky flippy or whatever they call it, or making a double bottom, blah, 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 blah. They're going to want to force the longs on there. And yes, they can work, but they're likely going to fail, and price is likely going to keep taking them out because there's an overall context and story that's already been established. So instead, we're just going to wait. we're going to throw on our session boxes. So you can see these green are just basically my session. They're just New York. So if that comes up, then great. You know, those are great areas to look for potential trades. And now we're going to play forward. We have a bias established, and we're going to show up when it's time, aka when we have our session come live. So our session is not live yet. You can see it's still delivering short. Let's say I didn't get on yet. I'm going to wait till my session starts or so. Actually, we might trade anything just to showcase that, you know, it doesn't matter when you trade, there can still be opportunities. It's just that I trade New York, so I'm usually testing New York, of course. So see what we get. So we have a market that was bullish, that shifted bearish, that's shifting bullish. This is what I call normally a full distribution model, not redistribution, but distribution model. This market's likely to go short. It might come up here to give us those shorts, but already as we start jamming ourselves up, there's actually going to be opportunities here that we can take. So if I see an opportunity that's going to present a nice RR, risk to reward, I'm going to take it. So right now there's nothing like that, but we're going to keep going. Okay, here we go. So at this point, what we're seeing is we're making a break to the top side off of already established bearish market, and we're near the top of that market. And at the same time, well, this is not good RR. So the way you would enter this candle right now, if this was the closure of the candle, is you'd enter it at the close, stop above the high, and you look to take it down. For me, this is not optimal RR. I'm not interested in taking this. It's not worth the risk, so I'm going to skip it. I'm going to expect price maybe wants to come a little bit higher before I take this, okay? Very simple. And if it doesn't, which it's not doing here, it doesn't matter. It's part of the game. We understand that we're not here to catch every single move. We trade our edge. The way we make money is by trading 0.01% of the moves of a 99% market, where most of the people that lose in the markets are trying to trade every single point. That's not what we do. We look for areas within which we are happy to take on the risk because the reward is worth our efforts, and now we can sit through it if we get that. Otherwise, there's nothing for us to do. So we're re-breaking down, which is great. The distribution model is happening. Maybe we get a new breakup and then we start to follow that short again. Fantastic. That would be amazing. But right now, there's absolutely nothing to do, right? We just wait. Yeah, no longs to be taken. We're just waiting. We get that distribution candle, but again, it's in the middle of nowhere. We don't have clarity there. This price can easily come through the high, and then it'd be a loss. So again, this is the importance of understanding that even if you have an indicator or an entry confirmation or a Wyckoff confirmation, that you're not using it randomly or sporadically. This is the rule of the snowflake, where price will distribute or accumulate or redistribute and reaccumulate in any area of any price. That is the snowflake rule. It'll always happen. It'll happen a little bit differently. It's a little bit unique, kind of like a snowflake, but it's happening at all times. If you try to trade every single one, try to predict every Wyckoff or every fractal Wyckoff or every double top or double bottom or whatever it might be, you're going to lose money. If you understand when it's time to execute your edge, and then you execute it when those opportunities present themselves, that's where you're going to make money, right? So we're going to keep playing this forward. I don't see anything yet. You know, I want to see it come up into the deeper range. I want to see it break up, or I want to see it keep breaking down. But right now, I just don't see anything, okay? So very simple. So we're breaking down. We're continuing that move down. I mean, we're coming towards our higher time frame target. Based on what time frames you trade, maybe you already have a trade on like a lower time frame or something, but right now I see nothing. Okay, so now we have a little bit of something, okay? We come up to the top side of this range, right? The protected high exists right here. We have this low here that's creating a target for us as well, which is lining up with this target. Fantastic. And we have the lower time frame target. I mean, the higher time frame target down here as well, okay? And we actually created the candle model for an entry. So this could be an opportunity that you're willing to take. Let's see what the RR on this presents. So about 4 to the low. It's okay, but usually I like to see an RR of 8 or more. This is actually not terrible. So I'm actually willing to take the risk on this trade specifically, just like this. So let's take a quick loss for everyone so you guys can see what it looks like to really trade. Okay, and I'll tell you when we're moving to break even if we are. Okay, so we'll go next. Okay, so we're not going to be at break even yet. We're going to give it a candle or two. Fantastic. We might actually create more of these. So here we go. Let's move this over. Boom. And we have the -1, the beautiful little -1, the thing that literally will make you profitable. If you cannot take losses, you will never make money. Taking losses is part of making money. Okay, so I'm still very happy to look for potential shorts as we get this. We might break up a little bit higher and then we'll look for it. So let's see what happens. We're going to keep following this price. Okay, so we've created another opportunity here. It's actually creating a very nice potential RR. You can see that, you know, it's relatively small. So this is where I'm willing to take on risk. We're going to enter this right there at market, stop above the high, and we're going to look to take this down to about 1 to 8 RR, just like that. Simple. We're going to keep this system very simple, and I'll tell you when I want to break even unless it takes us out. Okay, so it starts going down, remains at that area again. We're just going to give it a second, see if we get a down move. we do. See if we get down move, we do. At that point, right, think about fractal structure. So if you look at the kind of the wick structure here, this low is being caused by either this high or this high, which means that price could still absorb and hit this. So we're going to leave it on for a second. We're not going to move to break even yet. We're just going to let it do its thing. At this point, from a fractal structural perspective, you're actually creating a high around here. So yes, price could reach above it, but it shouldn't come back to the entry. So at this point, we're going to move this trade simply to break even. So that's how you would manage that. This has been moved to break even now. Move to BE, just like that. We're actually going to make it red for the simplicity. Okay, SL is moved to break even. There you go. And very simply, what we're looking for now is this partial, and that's it. And this partial for me personally on this system that I've been testing with the what I call the triple M, these fractal little areas that are setting up, this is going to be a 90% partial. So I'm going to take 90% of the position off here, and the rest of the 10% I'm going to trail. So let's see if we get there. You can't make it up, guys. I know how it looks. I know how it looks, but this is what happens when you follow a system. You have clear rules set forward. It's going to pay off. I know how this looks. This looks insane, but I mean, hopefully a number of you saw the beginning of this video where we randomized the pair, we randomized the thing, we fucking hit everything, we moved to the left, and we walked through the context of this trade. I was ready for this to be a loss. It looks the exact same as this one, but it wasn't. Okay, it's a win. I was going to keep making this backtest until we hit a win. So this is great for me because it's teaching you guys exactly how to replicate the same thing time and time again, because the same things repeat over and over and over again. And if you teach yourself to view the context, you can do anything for yourself. So 90% coming off at 8 RR. So once again, at 8 RR, you're securing 90% of that position. So you're securing 7.2 RR. So that's already plus 7.2 RR, just like that. No difference is taken off. The rest is going to be running right at the 10% left of that entire position. And you know, very simply, once again, let's run through the calculation on a basic $2 million ment funding account, because again, you're going to be taking this once you've gotten to a point where you know what you're doing, you have your edge, and now you're ready to go. Let's assuming a risk of, again, you're going to be risking smaller because you don't want to lose your account, of let's say 0.2%, where that equals 1 RR. Right, so now your risk is 1 RR, but that's equal to 0.2%. So what is that? 2 million times 0.002, right? So you're risking about $4,000 on the trade. So this is all equivalent to each other. Now 1 RR in your terms for your account at 0.2% risk is $4,000. So at this point, right, what you've just done is you've taken right here, you've taken a loss, of course, of minus 4,000, maybe a little bit more because of commissions, okay, and slippage or whatever it might be, but it's a 5-minute chart, so it's going to affect you a lot less. So maybe it's like 4,200 or something. Okay, here you're taking a win of 7.2 RR instantly secured, which again per RR is $4,000. So 4,000 times 7.2, so you've secured about $28,000 right here. We'll make it a little bit less to account for all that commissions potentially on both trades. So there we go, we've taken care of that. And now the rest is running at full on break even. And what we're going to do is, as it makes new structure, we're going to trail this with that structure. That's all we're going to do. Okay, so let's see if that happens. So we broke the low. You can see we broke this low, and as a result, right, when we broke that low, we've created a brand new high. Right, you can see the high right here. It just updated. This has become the new high right there. Okay, you can see the indicator itself updated, but again, if you just follow the basic rules, there's a displacement above that candle there. Therefore, money took itself above there, sustained its move above there, and then rebroke down. So this becomes the high. So very simply, this trail goes to this high now, and you can go just a tad bit above it. Boom. Actually, we'll keep it right on it. It's fine because we're fine with taking that. And let's see if we get hit. Otherwise, we'll keep trailing it. Okay. So it breaks down again. You can see the high now trailed to this next point right here. So we're going to trail that down to there. Easy as that. 1, 2, 3. Super simple. Okay. There we go. And we're out. Okay. So the rest of the 10% of the position gets closed right there. So there you have 10% of the position that's left is being closed. So again, that's 10 RR, 10.24 RR, but you're taking off the last bit of that's running, right? So you already took off, what is it? 90% of the position. So at 10 RR, you're only taking off the last 0.1. So you're making 1.024 RR there, right? If I did that math right, I hope I did. So right there, you're picking up 10%. Here, we'll go like this. which is 1.02 RR. So we're just going to call it 1 RR to make it easy, which is equivalent to 4,000, right? And very simply, the conglomeration of this trade now, again, assuming a basic $2 million ment funding account. So again, you can check out the link right above me if you want to check out the ment funding model and what it permits you. But again, we're assuming a risk of 0.2% only. So very low percent risk because of the model, because of the limitations of the ment funding model, if that's a prop firm that you're working with, where 1 RR is now $4,000 and there's your RR you're securing. So that puts you at $32,000 of profit on just this trade, equals $32,000 on that trade minus the 4K that you lost originally right here. Of course, so that puts you at, once again, 28 minus the 4,000 on the first loss. Okay, puts you at a profit on the day of like 28,000. Now again, this is not financial advice. This is all based on a simulated environment. You should all understand that. I'm just showcasing what a basic $2 million ment funding account at an assumed risk of 0.2%, not even 1%. Because again, at an assumed risk of 1%, this is already in the 6-digit numbers. And again, that's for about how much? For about an hour or 2 hours of work. Now again, you have to sit on there and watch. So maybe a little bit longer, maybe 2 hours, 1 hour, 55, whatever it might be. But there's the trade. And notice where it delivered to. Notice how it never came to the area we drew where we might have expected price to come back to, nor did it arrive to this higher mitigation area that we were talking about. Instead, we followed the given time frame we want to work with as our lowest one. We followed the models that are currently available to us, and we followed the targets that are setting up the precedent of the move. And as a result, when we had an opportunity that presented itself clearly, like this M, as I teach it in the private mentorship, of a fractal distribution, we were willing to get involved because the RR was clear, was good, and we managed it accordingly. We took off 90% at the first 8 RR, and we let the rest run with a trail that secured another 10%, which secured another 1 RR, right? So in this case, if you took 100% off, you make 8 right here. If you just took what we did here, you just took a 8.2. So it's not that big, but sometimes these moves, because of course we had this target here, can, as you've all seen before, fall off the face of the earth. And in the case that they do that, you know, you get to secure a much bigger portion of that move. And that's how these crazy, oh my God, so crazy, 27 RR moves happen. It's not that it's insane or anything. It's just that people are following their given system and their setup. And that's how, even in our mentorship today, right? Let me go back up here. So we had Dan H. He just basically sent out an entire breakdown of how he caught this trade right here. And he's been holding it for a few days. This was one from Tuesday. And he's been bearish on EU, and it's been a very bearish and beautiful market. I caught an EU trade as well. I saw a number of people catch an EU trade this week, and he's still holding this thing, and it continues to go. And he doesn't have to do anything else. It's going to keep moving as it needs to keep moving, and if it doesn't, it's done securing, right? He's already been able to secure his +5, the 6.25, 6.25, 6.25, and this is at an RR of 10, 25, 50, 100. So again, it's a move that's already moved 100 RR, but that's not how you need to think, because most moves won't ever do that. It's just that it happened that it did, right? And he broke that down for a number of our members in another section, which we're going to go over this week on a webinar. I personally, as you all know, caught this exact move right here off the M. Same thing as I just taught you guys right here. This same model for entry is one that I followed right here. And again, there's webinar 88, if you do end up joining up, is a phenomenal example and a breakdown of a trade plan that you can use with the M system. But again, there's your trade for the day, and that's it. Notice how we went through each time frame. Notice how we set this all up. Notice how we set up the context. Notice how we didn't wait or force longs into any given areas when the market was already proving short and showing us distribution and showing us where big money was getting involved in. Notice how the losses didn't matter for a fucking second. We didn't care, and you yourself watching need to stop caring about losses because they're worthless. And if you need psychological help, if you need me to sit there and go, listen here, bucko, here's the problem with thinking that way, blah, 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 analogy, boom, boom, boom. If you want to get that raw, unfiltered, mentfx.com, the link right below me. It's for you. It's for you right now. Otherwise, use what I'm showing you here today. Notice how I'm taking the 3-box method, the SSC method, and looking at it cross time frame, lower time frame, higher time frame, enveloped. Wait for the setups. You do not make money in 99% of the moves that happen in the market. You make money on the 0.1, 0.01%. You have an edge, and your edge is to wait while everyone else is need to get trade, need to strength. You're not here to do that. You're not here to shoot up and constantly just try to exercise, need to hit. No, You're showing up to analyze. If the trade presents itself, then great. Notice that this trade from when we started watching this market, which was around here, only happened about 9 hours later. And guess what? Sometimes you're going to be sleeping and stuff, so this might not be a trade that you get to take, okay? And in the current playout of all that, that's about 12 hours, about half a day to hit those 1 trade or 2 trades off a 5-minute where we waited for the model to be met. And in some cases, if we were in this model here, we might have not even been taking a trade, right? Which means that you could have gone for potentially 3 days with no trades. Stop thinking that you need to show up to constantly get trades. You're going to outperform most traders by not trading. You're going to outperform most people by waiting for your edge to take effect. You're going to outperform most people by recognizing that you are made to trade in 0.01% of the market moves when everyone else is trying to funnel their money into anything, okay? Like, you don't need to do that. You're not here for that. You're here to make money. You're not here to take trades. It's a very important distinction to make. Taking trades will make you money, but if you're only showing up to take trades, you're going to lose infinite amounts of money, okay? So I hope this little backtest worked for you guys. I hope you enjoyed it, and goodbye. Enjoy it. Please go and test it or join up. You know you want to. Bye.